When you think of a company that tests food samples, a high-growth tech startup probably isn't the first thing that comes to mind, right? Well, today we're looking at LMS Compliance, a company that's trying to be both. It's a traditional lab business, and they're making this huge bet on becoming a tech player. So let's dive in and break down this high-tech gamble.
And really, that's the big question here, isn't it? How on earth does a simple lab, a hands-on, reliable business, try to become a hot tech investment? It's a really bold move, a tough transformation for sure. We're going to unpack exactly how they think they can pull this off.
Okay, so before we jump into all the exciting future stuff, let's get grounded in the basics. What does LMS Compliance actually do right now?
All right, so LMS operates in an industry called TICA. That stands for Testing, Inspection, Certification, and Assurance. The easiest way to think about it, TICA companies are like the referees for pretty much every business out there. They're the ones making sure products are safe, that they actually work, and that they follow all the rules. It's a business that's all about trust. And, it's something companies have to do.
And that brings us right to LMS Compliance. At its heart, it's a Malaysian company that does exactly this kind of TICA work. But, and this is the really interesting part, they're making a strategic pivot. They're trying to move beyond just the traditional lab work and jump into the booming world of ESG. That's environmental, social, and governance. And on top of that, they're building their own digital compliance tools. So big changes are afoot.
So what's the big picture here? What's the story that's getting some investors excited? Let's take a look at the optimistic side of things, what we call the bull case.
Okay, their whole growth story really comes down to a three-part plan. First up, ESG regulations. This is huge. Singapore and Malaysia are bringing in new rules for climate reporting. That means companies will be forced to get their ESG data checked and verified. For LMS, that's a brand new market created by law. Second, they want to change up what they sell. They're trying to move customers from just basic testing to higher margin stuff like certification and those new ESG services. And third, they're making a big push into China by buying a company there. That gives them a foothold in China's massive food certification market.
That all sounds pretty good, right? It's a compelling story. But as always, a great story needs the numbers to back it up. So let's dig into the financials and see what's really going on.
Wow. Okay, the first number that just leaps off the page is their revenue growth. We're talking over 21% in a single year. For a business like this, that is seriously strong. It shows that there's real demand for what they're doing, even for their core services. That's a fantastic foundation to build all this new stuff on.
But here's where things get a little more complicated. Take a look at this. Even though revenue was flying high, their profitability, what we call the EBITDA margin, actually dropped. Now, your first instinct might be to see that as a red flag, right? But the company's story is that this was on purpose. They say they're investing heavily right now, hiring people, building technology to set themselves up for future growth. It's that classic, you gotta spend money to make money strategy.
And how can they afford to do that? Well, because of this number right here. They're sitting on almost 10 million Malaysian ringgit in what's called net cash. All that means is they have more cash on hand than debt. That is a fantastic position to be in. It's like a big safety net, and it gives them the freedom to fund their own growth without having to borrow a bunch of money.
Okay, but now for a bit of a reality check. Look at this breakdown. For all the exciting talk about ESG and tech, this shows you where the money is actually coming from today. Almost 94%, that's a huge chunk, is still from old-school lab testing. Those new high-growth areas we've been talking about, they're just a tiny sliver of the pie right now. So the big question is, can they actually change this? And that leads us perfectly into the risks.
All right, every great growth story has a flip side. You have to look at the potential problems. So let's look at the other side of the coin now, the bear case, and all the things that could go wrong.
There are really four main risks you got to keep an eye on. Number one, that China acquisition. Buying a company is one thing, but actually integrating it smoothly, that's always tricky and could be more expensive than they think. Two, segment concentration. What if they just can't get those ESG and tech businesses to grow? They could end up stuck as just a regular old testing lab. Three, the regulations. That whole ESG growth story depends on new rules. If those get delayed or watered down, a huge piece of their plan gets weaker. And finally, accreditation risk. This is a business built entirely on trust and official stamps of approval. If they lose a key accreditation, it could be absolutely catastrophic for them.
Okay, so there you have it. The bull case versus the bear case. On one hand, you've got this really compelling story about future growth. On the other, some very real risks that could stop it in its tracks. So, how do you decide?
At the end of the day, this is the question you have to ask yourself. Is the potential payoff from this high-tech transformation worth the very real risk that they just can't execute on the plan? It really is that classic investment dilemma, a fantastic story versus the cold, hard reality of making it happen.
You know, when you strip everything else away, it all comes down to one thing. The entire bet here hangs on whether LMS can actually make this transition. Can they use their profitable, stable, old-school business as a launchpad to become this new-age, high-margin, tech-enabled company? That's the gamble. And how they answer that question will define their entire future. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.